Who's looking for an amazing trade idea? I got one for you. I'm gonna walk through step by step using my platform on Thinkorswim. If you're selling stocks and you're just hoping, praying, waiting for your stock to go up and make money, man, you're doing it all wrong. Sell options. If you don't know how to sell a put, watch this video. I'm gonna show you how easy it is to create cash like this. Gets dropped in your pocket right then and there. Worst case scenario, you buy a stock that you like anyway on sale. Now, before we jump right into this video, do me a favor. Click the bottom right-hand subscribe button. Subscribe to my channel. I'm literally putting up a video every single day for 1,000 days, talking all about puts and calls, walking through lots of different tickers, giving you guys great ideas to trade on a regular basis. Okay, let's jump right in. XYZ. First of all, I love the ticker. XYZ is the ticker for Block. They used to be known as Square. They're a payment processor, kind of like Stripe, but Stripe is not a publicly traded company. Now, Block was founded by Jack Dorsey. He's one of the founders of Twitter, and they literally process almost $250 billion in payments every year, and they have over 50 million customers. They are a powerhouse, and I'm going to do this. I'm going to compare Block XYZ ticker against PayPal. So let's start with XYZ. First of all, we're always going to start with a one-year chart, right? So we can see that Block is trading about $62 per share right now. Now let's take a look at the options. The strike prices are down the middle, puts are on the right-hand side, and calls are on the left. So we can see November 21, which is only about 2 days away, or we can look at next Friday, November 28. First, we're going to take a look at a trade this Friday. Now we're going to start by looking at a $60 put. That last traded at $65, and there's a 23 delta, meaning there's approximately 23% likelihood the stock is going to trade below $60 before it expires in just 2 days. And look at the implied volatility on this stock, over 100%. It has a lot of swing, meaning you typically get paid handsomely for selling options. And this is a stock that's pretty solid, not going to go away anytime soon. So if it does go down, no worries. You sell another put, buy more shares as the price goes down, and average your cost down. Now let's take a look and see what the rate of return would be. If we're selling a $60 put and we're getting paid 65 bucks, we're taking in $65 in premium. Remember, that money gets dropped into our account right then and there when we make the trade. We're putting up $6,000 in capital if we're not using margin, which means we're making about 1% on our capital for 2 days of time. If I was to annualize this out, divide by 2, multiply by 252, we are literally making 136% on our money. Let me give you another idea. Let's say you guys really like Block. You want to do what's called a buy right. Buy 100 shares and then sell a covered call against it right then and there. Well, let's say you bought 100 shares at $62. If I was to sell a $62 call that expires again this Friday on the 21st, that last traded at $133. You're going with the momentum. Today, XYZ was up a little bit over 7%, as we can see here. So if we were to buy 100 shares and sell an at-the-money call, we would take in $133 in premium. 133 divided by our capital, which would be $6,200 if we're buying 100 shares at $62. We are literally making a little bit more than 2% on our money for 2 days' time. So we're going to divide that by 2, multiply by 252. We are flipping our money 2.7 times. How amazing is that? And here's the risk. Let's say we bought 100 shares and then the stock went down. Again, what we would do is sell a put lower, and then if and when we got to sign those shares, we're averaging our cost down. Pretty cool, huh? So let's compare it to PayPal. PayPal is a similar type company, and they're also trading at a similar type price. They last traded at $60.11. Now, if we were to sell a $59 put, also that expires this Friday, that last traded at $43. We can see the implied volatility is much lower as well. So to calculate our rate of return, we're going to divide $43, the premium that we're collecting, into $5,900, which is the capital required if we're not using margin in order to make the trade. It's about 0.7%. Divide by 2, same as what we did previously, times 252, that's the number of trading days in a year. We're still making 91% on our money. Let's take a look at the chart. This is a 1-year chart, and we can see it's been coming down pretty significantly lately. If we wanted to do a buy right on PayPal, and we purchased 100 shares at $60.11, and let's say we sold a $61 call, because that's the next strike above where we would purchase the shares at. That last traded at $51. So we're going to divide $51 into 6,011. That's the capital required to make the trade to buy the 100 shares. And that gives us a rate of return of about 0.8%. Divide by 2 days holding times 252, 1.06. So 106% on our money. Pretty good, but me personally, I prefer XYZ or Block over PayPal any day of the week. What about you guys? Let me know in the comments. Do you think Block is better or PayPal is better? Hey guys, so how'd you like that video? Pretty cool, huh? Can you guys totally see yourself trading like this? Listen, once you learn the basic concepts, you literally only have to spend maybe 15-20 minutes per day putting trades in. Trading options is by far the best gig in the world. No customers, no employees, do it from anywhere in the world and create yourself income on a weekly basis. If you like this video, smash the like button. Subscribe to my channel. I'm putting up a new video every single day. Check out my live streams. I have live Q&A on each session. Bring your questions. Let me know in the comments, what are your favorite stocks to trade? Cheers for now and happy trading.